It's fair to say the month of February has been volatile. It's been a tumultuous month with a lot of different factors to consider on a geopolitical front and a macroeconomic landscape, and of course discussions surrounding the inflation narrative and the rising interest rate cycle that's about to commence continue to be driving markets. Today, I thought it was time for us to take a bit of a step back and have a think about 3 different stocks to watch for the month of March up ahead, as well as a commodity that's been having a lot of time in the headlines over this past period. We know that there's a lot of different opportunities that have started to open up, so it's going to be fascinating to consider 3 different companies that are set up for an interesting period of March up ahead. Some of them are awaiting potential news flow and catalysts, while others have just reported in their past period and are now set up to have quite a fascinating upcoming month. Hope you enjoyed this video. Let us know your thoughts on it all. Drop in a comment below letting us know what you've got on your watch list for March up ahead. And of course, a standard reminder, I'm just a bloke on the internet who loves talking about the market. The stocks we cover, they're not buy recommendations. Hopefully, however, they are an interesting starting spot for you to go away and do your own research from. Stock number 1, Lynas Rare Earths. ASX LYC are pioneering a diversified global rare earth supply chain. They are the largest producer of rare earths globally outside of China, and they've just recently provided their first half report, and they had some really solid numbers. As you can see here on the right, record profit, record sales, really strong EBITDA, and of course, strong growth and demand. But as we all know, there's been underlying commodity price strength across a range of different sectors, and the rare earths have not been insulated from that. As a result of that, the margins look really strong for Lynas, and looking forward, the opportunity for companies like ASX LYC that are able to continue to bring production online and feed into this global decarbonisation trend, it's going to be quite a fascinating one. So just having a think about how Lynas is positioned. We know they've got top tier assets in place, but most importantly, they already are delivering. Of course, there's a lot of aspirational companies out there in the rare earth space that are trying to come online. There's plenty of room and demand and customers for product that can come online. So there's going to be lots of opportunities for a range of different companies, but Lynas are producing in the here and now. Along with that as well, they have their Mount Weld asset in West Australia. It truly is a tier 1 global level resource, and there is further exploration upside as well, which is going to be interesting to see what flows of that. They own the largest rare earth single processing facility in Malaysia. Obviously, they're well funded. They've got over $500 million in terms of cash and short-term deposits. They're well funded now to bring online their Kalgoorlie processing facility, and that's part of their broader Lynas 2025 longer-term focus. And so just having a think about that rare earth supply chain. As we know, over the past period, the rare earth supply chain has been very concentrated within Asia in China. Over this past period, we all know about the focus on diversifying out supply chains and building resilience into supply chains globally. We've seen with the lockdowns and the mobility restrictions how difficult supply chain shortages and supply chain bottlenecks can be for the rest of the broader macroeconomic picture. So as a result of that, there's a lot of investment going into the diversification out of supply chains, and Lynas is really a company that's able to feed into that with their offering that they've developed. We know that the rare earth elements are going to be critical for global decarbonisation. For an insight, the rare earth elements are actually not rare individually, but it's actually the rare component of having them clustered around enough in an economically viable quantity to actually be able to mine that makes them rare. So the rare earths have many different use cases, particularly a range of different magnets that go into things like wind turbines and electric vehicles, but they've got a real myriad of use cases, and many of these help to feed into that green energy transition as well. Obviously, with the focus on decarbonisation, the electric vehicle transition just starting to pick up pace, demand is pushing NdPr prices higher, as well as the rest of the broader rare earth sector. To get your head around the Lynas operation, Mount Weld is at the core of their operation. That's a tier 1 deposit, and then they have their facility over in Malaysia, but they're now looking at developing out their Kalgoorlie rare earths processing facility. It's a $500 million capital project. It's absolutely massive, hoping to be operational by around mid-2023, and the opportunity that can bring as it comes online is significant. It really builds out the further vertical integration for the Lynas supply chain. Another recent development as well that's worth noting, though it's still very early stage and it's just recently come to market, is that MP Materials, another player in the space, has recently been awarded a US government contract for a heavy rare earths facility over in the US. It's still early stage, however, this was a space that Lynas was eager to engage in and was definitely considering and thinking about. So it'll be interesting to see what flows through now and where potential facilities could be housed in years to come. And so bringing that all together, just having a look at the rare earths price here, this is just for ND, using this as a proxy as the broader rare earth oxide price. But we can see here the price signal came through at the back end of 2020. And since then, the prices has continued to soar higher and higher and higher. There's obviously high levels of demand. Supply is trying to come on now, but it is a complex business. It's not as easy as just digging a hole in the ground and really being able to bring product online. It's going to take a period of years. And so having a current producer that's able to feed into the supply chain and the demand really positions Lynas quite well moving forward. And then on to stock number 2. It's AGL Energy. ASX AGL is one of the leading Australian energy retailers. The reason why they've been in the news over this past period is due to a major bid of $8 billion for AGL at $7.50 a share. This was brought together by Mike Cannon-Brookes, the co-founder of Atlassian, one of the leading Australian technology companies listed over in the US, and Brookfield as well, an asset manager from Canada. It's worth noting that with the backdrop of this, AGL is currently exploring a demerger, splitting out their current legacy energy generation assets with the retail and the next generation renewable energy projects. So it's going to be interesting to see the dynamic of how this plays out. And so then just having a bit of a deeper dive into this AGL acquisition bid. Really, the core focus of it is shutting down the legacy assets, those coal generating power stations, and moving towards a decarbonised society and focusing on transitioning towards renewable energy projects. It's worth noting that the bid was rejected. It was an unsolicited bid. However, it's likely that this could be the first but not the final bid. We'll have to wait to see how this plays out over the coming months. The focus as a result of the bid was for AGL to reach net zero by 2035. Previously, the objective was to shut down the coal stations by 2045, so that is a fair while away. It's definitely brought that timeline forward. And it's really looking at fast-tracking investment in flexible and dispatchable energy capacity. It is worth noting too that the ASX AGL share price has struggled. Over the past 5 years, it's lost nearly 2/3 of its value. So the register, for those who have been longer term holders, may be looking at the opportunity to potentially get some reprieve and have the opportunity, if there is a further premium as their bids start to come through and more attention comes in on the assets, there is the opportunity for them to potentially exit or at least consider the actual acquisition prices. It is worth noting as well that yes, the initial bid for the company has been discussed. However, further to that, there is also further capital that has been committed to really help with this decarbonisation and to bring the renewable energy projects online, because of course, it's going to be time, capital, and knowledge intensive to do this successfully. And so then just having a bit of a consideration about why it's a big deal. I guess nationally, it is really a step forward in the national green transition. It's a focus of replacing coal generation with renewable projects. To have a bit of a context of the scale that AGL currently represents, AGL represents just under 10%, around 8% of national carbon emissions. Obviously, as we move towards a decarbonised society, to be able to slowly bring that down to zero, it's a major opportunity. There is also further emphasis on the corporate transition towards ESG. We know it will need to be a coordinated effort from both the regulatory front and the government lens, as well as, of course, the corporate front. And it just builds on some recent announcements, whether it's BHP, who are divesting out of their oil and gas assets, whether it's Fortescue, who have launched Fortescue Future Industries and really looking at green hydrogen as the next opportunity, whether it was Origin in the same type of space as AGL, who have announced that they'll be shutting down their Iridium plant earlier than anticipated. Underlying it all, it helps to draw further attention to the green energy transition and really positions AGL, if successful, to be a leader in the space. Of course, there's a lot of questions about how it would be implemented, the effect on jobs, industry, as well as energy prices, and all of this would have to be negotiated and navigated moving forward. But regardless of how this turns out, it's definitely drawn a lot of eyes onto the sector. It's going to be interesting to see if there's further bids coming down, whether other investors will look to take positions and try to get some opportunities into AGL as well. We'll be watching and waiting to see where things play out from here. And then stock number 3, Sayona Mining. ASX SYA is on the journey to building a leading North American lithium producer. If you're familiar with the Sayona Mining story, in 2021, they really focused on consolidating a range of assets in Quebec. Initially, this was centered around their flagship Authier project, which was going to be a standalone project, but they've really continued to acquire a range of different assets, and they're building out quite a hub in Abitibi and now a second hub in the northern region as well around their Moblan asset. Their aim is to become the first and largest producer in North America, and this centers around initially in the nearer term on bringing their North American Lithium project back online in 2023. But they're also committed in the longer term towards downstream production, as many lithium developers and producers are, to really capture more of that value chain and to really be able to provide in a product into the manufacturers. It's worth noting as well that Sayona Mining also have other assets, including West Australia Lithium and gold, but these are less in their near-term focus, as a lot of their near-term focus is on bringing online NAL and really building out that Quebec hub. And so why March could be an interesting month up ahead for Sayona Mining. We've got a range of different catalysts. Not all of these are in March, but the initial catalysts and really the starting spot for this upcoming transformative period for Sayona centers around some of these different components. Firstly, there is a resource upgrade inbound for NAL and Authier. As we can see here, they entered a trading halt last week. Obviously, trading halts can always be exciting, and there's a lot of excitement for investors about what this could mean. How big will the resource upgrade be? What level of magnitude is it? And then ultimately, what does that mean for the numbers that will flow through for the consolidated DFS that is due to follow? Not only will there be upgraded resource numbers, which of course is a positive, but you're also getting the second dynamic as well of upgraded lithium prices, because anyone who's familiar with the lithium sector knows it's continued pushing higher and higher and higher over this past period. Sayona want to work on finalising permits and funding, and investors are also eagerly awaiting offtake news and what that could mean for the company. Then on the Authier front, there is some Novonix battery performance test results due in the not too distant future, and then also longer term, just casting the eyes onto what that downstream opportunity is. To get an idea about the timeframe and horizon, Sayona is targeting resumption of production at NAL from Q1 in 2023, so it's not too far away, and we've done many videos on the channel about why near-term producers are so exciting, particularly with the elevated lithium prices, and so Sayona are hoping to feed into that. And so just bringing that all together into the NA lithium opportunity. As we can see here, there's a range of different companies with tenements and projects in the region. Sayona has 64 million tonnes there at 1.19% grade, which of course is very solid. You can see here across the rest of the asset base, they've got far and away quite a large asset. But what's interesting here is this is not including any resource upgrades that could flow through on the NAL and Authier front. So there's a lot of eyes on the opportunity that Sayona have. We've talked earlier in this video about the focus on localizing supply chains, building out resilient supply chains, and of course, lithium is another critical material, particularly to help to catalyze this EV transition. And so there's a range of manufacturers located within North America. Sayona is located in close proximity to many of these, and so they are really well positioned to be quite a key player in the NA supply chain for years to come. And so then, as we discussed, we'll talk about a commodity that's been having its time in the headlines over the past period. Of course, we all know about the geopolitical uncertainty and the discussion surrounding the inflation narrative, and that's really led to a volatile start to 2022. Many indices around the world are into correction territory, with the Nasdaq actually just recently touching into bear market territory, down by over 20% from its peaks. And we know that gold, along with a range of other asset types, is often perceived as a safe haven asset. Gold has been acting as a safe haven asset over this past period. It's rallied along with the US dollar. There has been this flight to safety with the uncertain macro outlook. Gold recently did test in and around that $1,900 US dollar mark, and a lot of eyes now are on whether gold can push higher into that $2,000 USD mark. It is the highest levels in over a year for the commodity. And of course, there's a lot of divergent opinions and discussions about gold's utility as an inflation hedge. There's a lot of eyes and discussion surrounding inflation at the moment. There are some very bullish gold bugs at the moment who really believe that this is the time for gold and it's going to continue pushing higher and higher, while others, of course, have got different types of opinions on how much utility it actually has in this type of environment. I'm very keen to know your thoughts on it all too, so drop in a comment below what your thoughts are on gold and the broader precious metal space, as they have really had their time in the sun over the past couple of months. And let us know your thoughts on the 3 companies we discussed today, but also any other companies that you've got on your watch list for the March 2022 period up ahead. We've looked into a range of different companies on the channel over this past period, so we'll leave links to those up above that you can check out after this one. If you enjoyed the video, don't forget to hit the like button. Make sure you've subscribed, turn your bell notifications on as well. You won't miss any of our daily episodes, and thank you so much for joining us. Best of luck in the month of March up ahead. We'll be watching to see if it's any more or less tumultuous than the past period of February that's just come and gone. Thanks for joining us. For now, stay well and happy investing.